Okay, guys, so we saw a pretty dramatic move to the downside yesterday across the market, not just Cardano's ADA here, but it was a 10.33% move. Now, obviously, we were in the short. We were following this down, following the 200 EMA. We were looking at this through the lens that maybe we had some kind of diagonal or some kind of expanding base diagonal movement within our fifth wave move. Nonetheless, we have now over-exceeded our typical expectations, and what's going on has to now be constituted as an impulsive breakdown and an overextension within our wave 5. Now, is that bad? It comes and goes. I think for the most part, as long as we know what's going on, it's neither good nor bad. So I look at this through that kind of perspective that actually things could be potentially okay. Now, just as we kind of get into this might shock you, but I am obviously not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies, of course, are highly volatile, and you could lose all your money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And this video, of course, is for entertainment and educational purposes only. Okay, so let's get into today's video where we kind of take a look at the technical analysis here on Cardano's ADA. So we saw this move to the downside, great profit on a risk-reward ratio here that was pretty much just pure profit as we put the stop loss basically at entry, or maybe even trailed this down. If you're doing following this in real time, you potentially could have actually been staggering this down. But we saw the great move to the downside here. Now, when I was kind of reflecting on this, we can, of course, see that this is a fifth wave movement. But taking a look at these inner workings, to me, this tells me that we have a much deeper problem on our hands. And it was potentially going to be taking us down deeper to complete out this wave 3 that we spoke about yesterday. So we need to be aware that this is, it's not going to be a bullish kind of time for ADA, not right now. Things can, of course, change over the weekend, but for now, I think we should be expecting more downside to come. So here we have another little wave 4 structure. Okay, and taking a look at this, typically we would expect a 38.2% retracement back to the upside. We're pretty much there. That would be 64.5 basically, or 64.49. So we want to be thinking now really that it's time to probably think about that, kind of finishing this bounce, this relief rally, and start moving back down towards 60 cents, which is kind of what I was talking about yesterday for our wave 3. But I was hoping that this would actually be more in line with, the actual fifth wave on the daily time frame rather than just being, where it is today. So anyway, it is what it is. And from here, what we can do is we can start thinking, okay, well, if the market is, of course, breaking down the way that it has done, and the kind of sentiment based on Elliott wave is that continues a little bit, then we want to be thinking about basically about potential short positions. So I would be thinking that somewhere in and around where we are right now could be where we put the short, and we want to target down towards 60 cents. Okay, so we'll be looking for something to this effect. You can see the risk reward ratio here is 2.2 with a stop loss around 65.78. We could, of course, lift that stop loss above that swing low that we had over here as well, because, of course, wave 4s are not supposed to intersect with wave 2s unless they are diagonals. And this actually hits 1.618 and beyond, so it would be outside of that scope, in my opinion. So taking a look at it, we want to be thinking about this move coming down a little bit deeper towards 60 cents. Okay, so it's not the best, but, it is what it is. Once that completes, we'll then be looking for the wave 4 relief rally. Still thinking 70 cents for that. The lower that this goes, technically the higher that wave 4 goes, and the higher that wave 4 goes, the lower that the wave 5 goes later. So let's roll this up into a daily time frame. We'll try to keep today's video a little bit brief. There's not terribly too much going on here, but basically this is what we're tracking, this 5-wave move to the downside, and it's possible that we re-enter into the previous accumulation zone, which is kind of something that we had kind of tagged a couple of times in the past. Very possible that we come back down and tap into it. More possible now after yesterday's market movements than it was, 2 or 3 days ago. So, I was hopeful that maybe when we close above the 200 EMA, we back tested it as support, that was going to be it for the accumulation. But, unfortunately, the market and the sentiment in the market just shifted, and we now see this move to the downside. Obviously, it's not ADA specifically, it is the entire market. It's not just Cardano, but we are focused on the Cardano technical analysis in today's video, so we're just referencing Cardano. But obviously, Bitcoin and other altcoins are doing the same. So we have a death cross on the daily time frame. Okay, so golden cross turned death cross, basically here, as you can kind of see the yellow line coming through the chart, that is your 50 simple moving average. The white line is your 200 exponential moving average. And we can see here the golden cross. So we just had a golden cross and, well, it looks like things are turning down on us. So it looks like golden cross turns to death cross probably within the next week. And again, it's only really showing you what's already happened. Just fancy ways of kind of telling you that. Obviously, it will have a bit of a knee-jerk reaction, or retail investors will have a knee-jerk reaction to that. So as it sits here, it doesn't look the strongest right now. So from our relative strength index here, you can see that it came down close to oversold, bounced up a little bit, but we're not quite in the oversold area on the daily chart just yet. So I expect further downside. The stochastic RSI variation is already in the oversold area, but I expect it to hang out here a little bit longer before we get any relief rallies. And then the MACD histogram here, you can see great volume coming in here. Now, what's really interesting to me about that is how we actually do have this bearish divergence that has been forming, okay? What do I mean by that? What I mean is that we actually see from here, from over here to over here, we have a higher low on the price action. But whilst we have the higher low on the price action, we can see that we actually have lower lows on the MACD histogram. So basically it shows that there's stronger sentiment to shifting the price action to the downside than there is in the terms of the price action. So the price action looks bullish because it's a higher low and there's nothing to worry about, right? But in the underlying data, it tells us that actually there's a stronger move to the downside here right now than it was back here in April of 2025. So with that knowledge, we need to be very cautious, right? We want to be thinking there's higher probabilities of shorting the market and the market going down than there is of longs going into the market pushing the price higher. So I think ultimately, until we tap back down into the accumulation, we should be thinking that this market is more than likely going to break down. So let's also talk about the elephant in the room then, right? Because the elephant is telling us that this is a 5-wave move, and 5-wave moves are never on their own. They are always paired up with at least one more. So if we are to indeed see this complete breakdown within our kind of bigger macro overlapping structure here anyway, so on the kind of bigger zoomed out weekly chart, for example, this is really not that concerning. But if you're kind of like hyper focused on the next kind of couple of months or so, you might be looking at this saying, actually, this is probably not the best place to be. Looking for a relief rally, but then looking for another 5-wave drop, taking us into the accumulative range, where historically twice before we have found great support. So I'm thinking there's a strong possibility here that we see 54 cents again in the near future. Okay. So with 5-wave moves, there's always going to be at least another. Now, there are a couple of different ways. This isn't going to be a full educational kind of, Elliott wave course, but I'm just going to briefly find some space here just to kind of show you that 5-wave patterns can appear in just a handful of areas, right? So in our case, we've got one coming down here. Okay, so when you have 5 waves like this, that can either be a part of an A, B, and C structure like this, okay? It can also be a part of something that would be an irregular flat or an expanding flat or a running flat. Basically, you'd have your A wave, in this case, over here, for example. Let me do that draw the right thing, in fact, grab the ABC, A, B, and you'd have a C pattern, right? And I drew it the other way so that, draw it the other way so that you guys can actually see A. B goes up higher than the origin of A, and then C comes down lower than the depth of A, right? It's irregular. It kind of expands out, right? So you could have a 5-wave pattern at the end, right, is my point. Alternatively, of course, you would have something that would be known as a running flat. Again, very similar. You'd have your A, your B that goes higher than the origin of A, and then your C wave here actually stays contained inside the B wave pattern, okay? And now you call that a running flat. So again, you can see the 5-wave pattern ends at the end. Now, my point here is that typically those are quite rare. You don't typically see them very often. And instead, what you tend to find is you have 5-wave patterns that appear like this, right? And this is a corrective pattern A, B, and C. It's known as a zigzag pattern, okay? So you can see here that how it works. Now, sometimes they actually call this an inverted zigzag, but to be honest with you, a zigzag, just think of it can go in both directions rather than a zigzag going up and an inverted zigzag going down. Just to me seems pointless in kind of referencing it like that. Anyway, nonetheless, 5-wave patterns, they don't appear on their own unless they are a part of a bigger corrective pattern. And even if they are a part of a bigger corrective pattern, such as an ABC irregular flat like this, for example, that A wave should also still include a 5-wave pattern, right? It just kind of breaks its norm by having that kind of breakout situation only then to completely reverse on you. Think of it like a trap. Okay, so not an Elliott wave lesson, but just so you understand the context of why a 5-wave pattern here can then lead us back down into our cumulative range. Okay, because it's not really going to be on their own. Of course, it's possible that we have ourselves the irregular flat correction or a running flat correction like this, but that's very irregular and I don't think it's likely to be the case. Instead, I would look at this market thinking to myself, we probably have a WXY pattern, which would be more like this with a W here, an X wave there, and then a Y wave coming down into these lows, kind of just shaking out a lot of people before the next big move. Okay, now of course on a bigger macro picture, that really doesn't matter so much because it is just noise here on this kind of bigger macro piece where we're looking for the C wave higher to the upside, which I'm tracking as a diagonal based pattern at the moment. 3 distinct ones come to mind. We either have a contracting diagonal, an expanding diagonal, or an ending diagonal. Now, diagonals, they contain 3-wave patterns rather than 5-wave patterns, and those 3-wave patterns contain 5-wave patterns. So they kind of nest inside like Russian dolls. It's the easiest way to kind of think about it. So for ADA, it's been a bit of a rough ride if you were not in the short positions like we were talking about, right? But of course, you know, if you're just spot buying, hodling, and, you know, it's just noise at the end of the day because the bigger macro picture is still a relatively bullish one, but it's going to take months to play on out. Okay, so it's just more opportunities to build those positions. But again, just my thoughts and opinions on the data in the charts as I personally see it. Obviously, I'm not a financial advisor, as I mentioned earlier. If you want more details and more stuff that's going on when it comes to technical analysis or fundamental news and all that kind of stuff, make sure to join the Discord server. There's a link in the description down below. And guys, I'm going to leave it there. So if you found it useful, smash the like button, subscribe if you're new, and I will catch you all in the next one.